We all know that debt is a huge challenge for Verizon. The company has $175 billion worth of debt. And that has funded the company's growth over the past number of decades as it's built out the 3G network, 4G network, now 5G network. It's very, very expensive to build out these networks. The good news is when you build out the network, then the business that you can build on top of it, wireless services, is very, very highly profitable. The problem for Verizon for the last couple of years has been that debt is now becoming more and more costly than it was during 2020, 2021, when interest rates were near zero. Interest expense has nearly doubled for Verizon, but there may be some good news on the horizon, and that's that interest rates are starting to come down. The Federal Reserve has not lowered rates yet, but the Federal Reserve only controls very, very short-term interest rates. The market controls longer-term interest rates. And the market is telling us that rates are going down because and the market has pushed rates lower over the last few months. I want to get through exactly what we know and how it's going to impact Verizon, their income statement, and even their cash flow. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I want to start with the market news that we know about where interest rates are going. This is data from Bloomberg, and this shows the 10-year government bond rates for the Americas, and then you can look at Europe, Middle East, and Africa, Asia Pacific, all kinds of data here. But the trend that I want you to look at is United States yields, 3.79%. This is for the 10-year bond again. On Friday, those yields fell by 19 basis points, so 0.19%. Over the past month, the rate is down 57 basis points, so over half of a percentage point. So this yield was 4.36% just a month ago. Now that may not sound like a big deal, but on $100 billion worth of debt, that is savings on an annualized basis of $570 million. So now, can you see how this is such a big deal for Verizon, what interest rates are doing? And if you look at the company's cash flow and income statement, you can see where the impact of interest rates are having. 2022, $37.1 billion worth of cash from operations. That was about flat last year, despite the fact that they were spending less. This year, cash from operations actually starting to decline a little bit. Now, what you notice here is cash from operations, you take net income and then you subtract out non-cash expenses, depreciation, retirement benefits, deferred income taxes, credit losses, which is expected credit losses. That's something that you're going to write down, but you're not necessarily taking the loss quite yet. Equity in other businesses, there's a goodwill impairment. What you're not taking out is interest expenses, despite the fact that that's not really an operating cost. So one of the reasons that cash flow is going down is because of this line right here, interest expense. $3.6 billion in interest expense in the full year of 2022. Just 6 quarters later, the interest expense was $3.333 billion. So nearly as much interest expense in the last 6 months as there was in the entire year of 2022. This is starting to be a real challenge for Verizon. And you can see that the interest number on a quarterly basis just ticks higher and higher and higher. Higher interest rates also make it harder to pay down debt. If that was what Verizon chose to do, you can see you have to add these two things here, debt maturing within 1 year. This is the debt that is going to actually have to be refinanced at a higher rate. This is why this number is so challenging. This has gone from $9.96 billion in 2022 to $23.3 billion in the most recent quarter. So all of that debt, if it's variable debt, it's going to reset on an ongoing basis. Anyways, if it's fixed debt, you're going to reset from an interest rate of 2-3% to maybe an interest rate of 5-6-7%. That's going to be a huge challenge. Now, long-term debt is a different story. Some of this debt is financed over the course of decades. So that's not going to be as much of a challenge. But you can see that that debt level has not really changed all that much for Verizon. And one of the reasons is that they have less cash to pay down debt because they're paying so much in interest. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The interesting thing for Verizon is this is not really something they've had to think about much over the past decade. The chart here shows interest expense, net interest expense, since 2014. And you can see that the highest interest expense that they've had is in the last 12 months. That's because interest rates were not particularly high at any point during the 2010s. We had quantitative easing. we had relatively low rates from the Fed. So Verizon has used variable rate debt. That actually helped things out in 2021 and 2022. But that reversed when rates went up in 2023. At the same time, the level of debt overall has been increasing. And this is in part because they took out a ton of debt to buy the wireless spectrum that became the 5G network that we know today. But you can see sitting right around $152 billion worth of debt. Now, potentially, the lower interest rates that we're getting to right now, potentially even lower interest rates later this year and into 2025, could mean that Verizon could do a couple of things. They would have more cash to pay down some of this debt. They could also refinance some of their debt at a lower rate than they could have 3 months ago, for example. But as we enter this cash extraction mode in the business overall, remember, they have invested in the 5G network. They've built out all of the depreciable assets. Now they enter a phase where you're trying to grow as much revenue as you can because your services margin is going to be 70-75%. So you want to grow those services margins because that's where your cash flow is going to be. So your depreciation expense, so your capital expenditures go down and your operating cash flow should be going up. That's the general trend that we've seen from Verizon. This chart puts into context exactly what I'm talking about. You can see that capital expenditures were $23 billion on an annualized basis in 2022. That has come down to about $16-17 billion over the past 12 months. That's likely where we're going to be on an ongoing basis. Now, the challenge is the operating cash flow has not been increasing over the same period of time. So this is where the hope is that you see a little bit of increase in the number of users, in the cash that they're generating from each of those users. That's where I'm bullish on things like bundling. So you bundle together wireless services for a smartphone and broadband and streaming services at the same time. You're going to increase the overall margin, increase the overall revenue that you're generating per customer, but you're not increasing the capital expenditures that you're going to actually put into the ground. So that's the way to grow the business long term. It's a little bit noisy in the quarterly numbers, but if that does happen and interest rates come down, so those interest expenses come down, that means that the company could be generating even more cash, could pay that back to investors as dividends, could pay down debt and reduce risk in the business. All of those things would be tailwinds for Verizon. So don't sleep on the fact that interest rates impact companies very, very differently. A company that has a lot of debt like Verizon can actually see a pretty significant tailwind from falling interest rates. And hopefully the context on how quickly those interest expenses have increased at Verizon will be helpful in understanding how lower rates could be a benefit for the company long term. Well, let me know what you think about the state of Verizon today in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.